Again, welcome to Trading Around News Announcements. My name is Greg McLeod, and we're going to get started in just a couple of minutes. And we're going to start off with a poll. Do you trade economic news announcements? I think I'm missing a couple of letters there, but I'd like to get your feedback, find out if you do trade the news. And the four choices are: yes, I place trades as soon as the numbers are announced; 2, no way, news is too risky; or 3, yes, I trade a few minutes before the announcement; or 4, I trade a few minutes after the news announcement. And we're going to talk about different strategies for trading the news and what news actually moves the markets. I want to thank Tom for switching places with me. I know you didn't have much of a choice, but I'm glad to be here and to be able to broadcast to you and talk to you more about this. We'll go ahead and leave the poll up for a couple more minutes and get your feedback. And we'll close the poll in the next couple of minutes. But the news is coming up, big news. The world's going to be looking at non-farm payroll, which is the U.S. employment number. That comes out at 8:30 Eastern time. The previous number was 257,000. Is expected the non-farm payroll numbers are expected to fall to 240,000. And it's always the first Friday of each month. And it trumps all other economic announcements. So we'll give you another minute or so on that, and then we'll go ahead and get started for our presentation. And if you have any questions ahead of time, like Timmy has done, feel free to put them in the chat box ahead of time, and that way, as we go through the presentation, I can address them, or we'll give you some time at the end. And that's a very good question, Timmy. Do some get numbers before they are public? It seems to me that in some pairs it looks like that's the case. Now there is, there was a big case of insider trading that came out in Australia. If you remember that, it was a guy that was actually it was trading. He made like $7 million using his iPhone. He had someone who worked on the inside at the Reserve Bank of Australia, had an intern that would pass him out numbers, and he was actually doing quite well. It was with a firm called Pepperstone, and they were doing this kind of insider trading, and they were caught, and he was because of there was a news leak. And also remember there was snafu with the wife of the central banker from Switzerland, who had inside information. But there's legal ways of getting insider information that you can. There's a service through Thomson Reuters that allows you to get that information uh, a little bit early, a tad early, before it's actually released for a fee. Oh, but it's 7:01. Let's go ahead and stop our poll, and let's go ahead and stop the poll. And there's our snapshot there. Okay. And, okay. So we got some people pretty much split everywhere, except that I trade a few minutes after announcement, and that's going to be something we're actually going to talk about. So let me go ahead and. So again, welcome to Trading Around the News. My name is Greg McLeod, and it's great to be with you. I want to thank ORFX for the opportunity to be able to share with you this exciting webinar that talks about one aspect of trading around the news. Now, many people think trading the news is very risky. A lot of people think that the news is rigged, but a lot of times they call them fundamentals, not fundamentals, fundamentals, because sometimes currencies don't move the way they're forecasted to move based on the data. Okay, but we're going to talk more about that and how to actually trade these strategies. A couple of strategies you can use for trading the news. But let's find out more about how the news actually impacts the movement of a currency pair. What types of news impacts currency pair? And so let's get to the risk disclaimer. Make sure you understand all the risks associated with foreign exchange trading. And again, a little bit about myself. I'm a 20-year trading veteran. I worked 8 years for a world's largest forex broker, and I love teaching and training people. And this is a great opportunity for you to learn from me and to be a partner of RFX, so you can have access to my years of trading experience. Okay, so our objective here is to learn how to benefit from the economic news releases. We're going to learn which pairs to look at during the U.S. economic news cycle. And then we'll learn the news straddle and also the news fade strategy. Now the key points, like many forex traders like trading the news because of the huge price moves that happen in a very short time. You can see that maybe within a few minutes, an on-farm payroll announcement, prices can move, 70, 80, 100 pips in just a matter of seconds. There's some people that all they do is trade the news. But however, without a basic strategy or approach to trading the news, traders have large losses, and there's a lot of risk involved. And economic news releases drive short-term fluctuations in currencies the way news about a company drives stocks. Okay, if you think about like earnings that comes out for maybe an IBM or a Facebook, and they declare that they have better earnings and more revenue, the stock goes up because the perception of that company being strong, being profitable, makes people want to own the stock. Well, similarly with currencies, if the economic news is strong, showing good job growth, good retail sales, or any other positive economic indicator or metric, people want to buy that country's currency because they believe that growth will continue to create a higher currency, a stronger economy, higher inflation, higher interest, and that's what people are searching for. They're searching for high yield, and they're searching for growth. So knowing what pairs to trade and what news to pay attention to, as well as having a plan of action, are all necessary ingredients to news trade like a pro. So online calendars can show economic releases that can potentially move the market, such as Forex Factory. There's MyFixBook has a calendar. Bloomberg has a calendar. DailyFX has a calendar. These economic calendars are arranged by country and the currencies they have impact, and they also have they're sort of chronologically when they come out, what time of the day they come out. And usually they'll have some type of a color key. Red meaning a high impact event that will drastically move a currency that's very important. Orange, a medium impact announcement that has a medium importance. And yellow with some type of it's low. It's a news announcement that may not have a very big impact on the currency. So usually the higher the impact, the more pips of movement can be expected. So I like focusing on the red events, even though I've seen prices move on the yellow events as well. Now, this is another sample of a calendar. This is Forex Factory, and you can see that they have little factories. I always thought they were file folders, but they're actually little factories. And you can see the red's very important. Versus this is one from today. We had the Eurozone had the minimum bid. That's the interest rate announcement happened at 7:45 a.m. But before we also had a Bank of England rate announcement. They kept rates unchanged at 0.5%, and they came out at 7 a.m. And notice how that folder is red. And we saw a lot of the currencies move very strongly that were pound currencies. And so this comes out, and really this whole calendar is produced maybe a week in advance. So you can like mark your calendar of these different events and look at them and have them planned out. In fact, the euro, when I traded today, I traded mostly the euro and the pound pairs today, and that's where most of the action was, based on these big news announcements. Now here's a breakdown of the most volatile news reports based on average pips moved on the euro. Starting from the left or from the right, we see retail sales. It gets you about 80 pips. So if you're looking at retail sales from the U.S., and it's a very important announcement because the world is consumer driven. You know, about 70-80% of the GDP is based on retail sales, and so having if U.S. retail sales is up, it means you're buying a lot of foreign goods, which is good for other countries around the world. But we could see that the euro will move based on about 60 pips based on the retail sales report. CPI is Consumer Price Index, and that measures the rate of inflation, and that's about 60 pips in movement. Trade balance is worth maybe 70 pips of movement. And FOMC, or the Federal Open Market Committee, that's the U.S. Central Bank, or the Fed. They call it the Fed, and that's when Ben Bernanke or Janet Yellen, who's now the head, they announce the interest rates in the United States, or they have some type of statement of monetary policy, where it's the Fed minutes, or if it's the actual interest rate announcement. We can get a pretty good jump in currencies based on what they're saying. The NFP is the granddaddy of them all, non-farm payroll. It measures how many jobs are created each month, and we can see 140 pips of movement, and sometimes that movement continues into several sessions, where that creates this reverberation. Think of the news as like a rock that you throw in the water, and when you throw that big rock in the water, it creates a ripple effect. Those ripples move out throughout that pond. So that's what these news announcements, especially NFP, they'll create that ripple. And since it happens at the first of the month, you're going to find that currencies are going to move in tight ranges the first week of the month. But after non-farm payroll gets out there, you're going to find that second week we're going to be, people have a better understanding of the interest rate policy in the U.S., and other currencies will act accordingly. If we have a pretty sad number of jobs created, maybe below 240,000 jobs, we could see rallies in the euro and the pound against the U.S. dollar. And we'll talk about why that is so. So I like, okay, this is probably out of order. I want to go to this slide last, but let's say what currency pairs to trade. Okay, there's a lot of pairs you can choose, lots of ones you can, you go the euro or the pound, but it really depends. When you're trading the 830 news cycle, you want to concentrate on pairs which have a lot of liquidity, like Tom mentioned, pairs like the euro that have, we want to be able to get in and out of your trade, especially in a fast-moving market. And a lot of traders are going to be thinking the same thing. So you want to be where the party is, where the crowd is. So there are many pairs to choose from. It's important to choose a pair that has high correlation with the event that's being traded. For example, when trading the Bank of England interest rate announcement, you may not want to trade Aussie dollar. Rather, you want to trade the pound pairs. Okay? But when you're trading the U.S. news cycle, you want to trade maybe the euro dollar, the pound dollar, and maybe the dollar yen. It's 25% of all trades are going to have the euro. 15% are going to utilize the pound versus U.S. dollar. 17% of them are going to use the dollar yen. 90% of all FX transactions have the U.S. dollar in them. So these three currencies account for a lion's share of all the volume in FX. So even though you might see something like the the Turkish lira versus the the Danish kroner, there's not going to be a lot of volume in that. Okay, most of your volume is going to happen in these pairs up here. Okay, and the one in particular I like using or trading is the euro because it's considered the anti-dollar. Why? Because the eurozone has a very large and deep financial market like the United States. So if big players are moving out of the dollar or out of the United States because of weakness in the U.S., they want to have another market they can go to which has enough depth and liquidity where they can move into the market without moving the market themselves and being the market. So they could, maybe Australia has a good economy, but they try to move into the Aussie dollar. It's just not deep enough to allow them to access it and to profit from it. Okay, so we usually find that either we're finding that players will either move into the eurozone when the U.S. economic data is weak, and when the eurozone economic data is weak, we'll see players move back into the U.S. dollar. So you see this kind of this teeter-totter approach between going to the euro or going into the U.S. dollar. Now, when we're looking at news, some of the things that we're looking for is not just whether the news is good or not, and that can be very easy on the surface. Good retail sales in the U.S. then you might be mean a higher dollar. Good retail sales in the eurozone might be higher euro for that short-term period. However, sometimes we have revisions of previous data, and revisions can complicate news trading, as previously reported numbers may be adjusted and revised upward or downward. If these revisions are minor, they may not impact the movement of the currency pair after the release. I mean, sometimes we have a revision in non-farm payroll, which they forget to count a whole state. They forget to count the state of California, so they have to revise the next number up. and so that means, and let's say they revise the number up, but the current number is flat or slightly negative, but the revisions were greater than the actual current negative result. Sometimes that's offsets and it's considered good news. We don't have so many of those nowadays. We have to gain a little bit better in their data collection. We still have revisions, and if they revise several numbers in a row, they can, for some reason, that can really impact how the current news item is perceived. Okay, so now we got an idea of the currencies that we want to trade, what news events actually we should pay attention to. Now let's put some meat on the bones here and look for a strategy or a couple of strategies we can use when trading news. On the chart that you see in front of you is a Euro 5-minute. It's a 5-minute chart, and if you notice, I have these zones, demand zones that are drawn, and resist these red zones where are supply zones, resistance areas where prices have consolidated and created little areas of resistance. Now, this little area going right toward the end here between the two white lines, that is our range going just before the news, where price kind of like dropped off, consolidated about the 5, 10, 15, 20, 25, 30, 35 minutes. This is the actual news announcement, and then price actually broke out. So we can create this straddle by placing a buy stop maybe above the high. We can create a buy stop above the high and looking for a sell stop below the low, and then looking for price to either break to the north side or break to the south. In this case, it broke up. We would enter the trade, and we would take profit maybe at the next level of significant resistance. Okay, this is called a straddle because we don't know which direction it could break, either north or south. What we just want to do is place a entry order just above the high or just below the low. Now remember, I did a scalp trade during the pip and run segment where I placed a buy stop above the high of the pattern and a sell stop below the low. and I got stopped into a long trade and was able to get a pip out of that very quickly. And so you can see that if we have a big news announcement that pushes price out of this range, that we could be able to capture the profit. Okay. Now, when certain platforms have OCO, where they can called it's a type of order called an OCO, which means order cancels order. So when one side of this straddle is triggered, the other side is canceled. Okay. So if we trigger the long trade, we definitely would want to be out of the, have this trade canceled or taken off our books. So price doesn't whipsaw and get us into both trades, and that would not be, a negative. Okay, so we want to keep the trade that is in play and get out of the trade that's out of play. Now that's the straddle. In fact, this is a real life one. This is one I traded today, and this is the Eurozone, the rate announcement. This is the consolidation. This is actually a 1 minute chart, and this is a 200 simple moving average. And you can see that the moving average went flat in the minutes before the actual rate announcement, and we have this kind of a range bouncing between support and resistance, and then right at the break of that line, we got a rally. Price came back. The euro came back and tagged the line, and then jumped up dramatically. We had a huge rise to the top there, and so I was able to scalp. I had an entry order there, got stopped into the trade, buy stop above the high, into the trade, and we were able to capture this move on the euro in a matter of minutes. Okay. Now, I had a kind of a bias to the upside with some higher lows, so I didn't really have a, I didn't have an order on the other side here, but it would have actually triggered, and we'll see what happens next in our next strategy called the news fade. A couple of things. Once this is broken, we can place our stop below the last swing. And so when price came back, it didn't stop us out, and we were able to, so let me highlight that with another color. And so our stop, the last swing was probably here. And so that was our stop. And then we can take maybe the height of that rectangle, and we can project that height for a potential profit target. Because this is a rectangle, and sometimes we can get a 1x out of the rectangle just taking the height, and that usually gives us a good target. And you can see that we had an equal wave move there. Now with the news fade strategy, it's just like this picture here. The guy is sitting there with his hands, sitting on his hands and waiting. Okay, we can avoid what this news with the negatives of the straddle strategy is you can get stopped into both sides of the trade. You can get a very volatile zigzaggy price action where price rallies up, it rallies back down, especially if you have a revision. Okay, it will jump up and jump down and then knock people in the trade, in both trades, or get a loss on both sides of the trade. So that's definitely a possibility. But the news reversal strategy, the news fade strategy, allows you to wait or sit until the news announcement is already finished, and then allowing the real market to come back in. Because you got to understand that a lot of big institutions, they're going to sit on the sidelines when a news announcement comes out, and they're going to wait, and they're going to read the report, and that's what creates that big, huge move. There's not a lot of big players in a big move. People say, "Oh, wow, this is a big move. There are a lot of big players involved here." Not really. When you have an absence of buyers and sellers, you create these big price gaps. That's why penny stocks move so quickly, because there's not a lot of volume, and just one or a few orders can get things going really fast. When these are like retail players going right at it, and what happens is after a few minutes, after 30 minutes to an hour, prices settle out and the real direction comes back into play. Now, if you look at the euro on a daily chart, this is a big, long downtrend. I mean, huge downtrend. And this little blip here is just a blip against the overall downtrend. And Tom talked great about the importance of finding the trend. Is this rallied up, big counter trend move, fast move? But if you could, as you can see, price came back down, and as the market moved forward, and times, well, why are we buying the euro? The euro's in a downtrend, right? They've got interest rates at 0.05%. I really don't want my money in here, and so the real market came in and took this back down. Okay, and so the news fade allows you to wait, sit in your hands, let this pass, and then waiting a half hour or so, we can see that the real trend continued down afterwards. And let's get to that. Okay. Now the thing about this though, waiting for the news to fade, that ripple to dissipate, is that you could miss a majority of the move. And so this is the complete move of today's straddle meets whipsaw. Okay, so here is our consolidation going into news. Big breakout north, and I got near the top. Price reversed, came back down, back through the channel, back down, came back in, and so this is maybe an hour or so after the news, and then now this would be the place where news traders, the news fade traders would come in and say, look, we went up, we went down, we settled, and now the trend, a double top here, and now the trend is resuming to the downside. Okay. And so this was all that transpired today on the euro. If you pull up a euro 1 minute chart or 5 minute chart, you'll be able to see this whole drama that unfolded. The news straddle traders would have taken this long on a breakout, taken their pips and ran. Okay, news fade traders may have come back in there and said, "Hey, you know what? I'm going to wait," and then we waited. Prices rallied up back into this channel, the original channel from earlier on. Had plenty of time. No news, no pressure. Institutions are coming in, and now they're taking this down in the direction of the primary trend. And so that is a very a good way of trading. Two, if you don't want to trade, you can get in there before the announcement. You can even get in on a break with a straddle, or you can trade the news fade. Now let's see. Okay. Oh no, now let's go back to what I wanted to show you. And okay, this is an actual when I traded non-farm payroll last week, and let's see if it will. I guess it doesn't come. It doesn't come over because I had it because it's saved as a slide. That's right. Okay. Well, you know what? I have it on my desktop, and I can still show you. Okay. So give me a moment while I go ahead and load that up. I think I'm wondering. I go, that's not working. Okay. So let me go ahead and I can go to desktop sharing, and we can go and share the region. Okay. And I don't know if you'll be able to hear it or not. It is a 3-minute chart of the euro, and just before non-farm payroll, and we had nice push to the upside, and the number came out, and you see price turning. And I'm checking the calendar. I'm going to check I check the Forex factory calendar, and you click refresh, and it'll update in real time. So the number came in at 257,000 jobs, better than expected. And then we can see the price actually drop. See the big, huge drop there? And my trade was triggered. I'm looking for price to move lower. The euro was breaking 113.90. And we can see that price, that huge bar. See the consolidation. You can see the small range, the consolidation. We came up on the. We broke a small rising trend line. So we got to like 6.9 pips, and it's dropping. There's a big red candle. And I use pivot points as my target. I talked about pivot points during my pip and run event. That's an S1 pivot. And you can see 9.0 pips, and we start to move lower, and then boom, we limited out there, and price continued to move. Okay. So that was the that was our move there. And let me go ahead and stop sharing right there, and go back to our slides. Okay. Yeah. So that was that slide. So we have big fast movements like that, and there was very little whipsaw, and so it was a great trade to take and to wait for that number to come out. But I did have the entry order in, and so was able to get into that particular trade. So are there any questions about the news trading, about what we had the straddle? You can either play the straddle by finding that range. The range is going to come out at 8:30, so you want to look at maybe like 8 o'clock, okay, and look for that range that gets established. Once you find that established range, you want to maybe place a buy or sell stop, maybe a few pips, buy stop above the high, maybe 5 to 10 pips. You want to do this in a demo account. Get your RFX demo account. So the salesperson that's there will show you how to get your demo account, and look for that range before the 8:30 announcement 30 minutes before. Look for that rectangle. Place an order to get long just above the high, a pending order above the high, a pending order below the low, maybe 10, 15 pips. Because 10, 15 pips, that gives you enough clearance where you won't maybe not subject to whipsaw. Again, do this on a demo account just to see how it affects the trade. Okay. And I see some questions in the box. Okay, he says, "How am I subscribed to that?" I guess Timmy's referring to that Thomson Reuters. Thomson Reuters supplies a lot of news, so you might contact their institutional trading desk or their news desk and subscribe. So, and then CT. So there's a big brother checking the large transactions. In ASIC. The ASIC is the regulatory body for Australia, and so they are, inside there in Forex. You don't have the insider trading rules like you have in stocks. However, ASIC has its own internal policies about, the Reserve Bank of Australia, especially someone on the inside, giving unfair advantage to a trader or traders group of traders. So, there is that. I mean, if you have I'm sure if you're a you're at a cocktail party with Glenn Stevens and he says, "Hey, we're probably going to cut rates in June," you know, you may not be prosecuted for that, but if you're funneling out data, via your cell phone, taking pictures of documents and sending them, you're like Bud Fox in Wall Street, then you might find yourself in jail. And then Junie, via their your Facebook connection, yeah, that's another thing. The social media, you find those kinds of things. One, I traded the Reserve Bank of Australia announcement, and I had a chart, and I actually posted. If you follow me on Twitter, I posted. It was like I said, Clarence Beak says there will be no Reserve Bank of Australia announcement, and it was a lot of people found it was really funny because they were widely expected to cut rates from 2.25% to 2%, and I was looking at the way the price action was, and it didn't look like anybody was believing that they were going to cut, even though the forecast called for the cut. I went long. I didn't. I went long, and people said, "Why did you go long for?" I was like, "Well, I have my systems in place that actually we're looking at, and nothing is particular." Let's see if I can. I can. Yeah. Let me share this with you. Um, no, desktop sharing and share region, and okay. Let's see if I can project this out. If you guys remember Trading Places with Dan Aykroyd, Eddie Murphy, and there's a guy named Clarence Beaks that had supplied crop information. So this is the chart. This is the chart before the Reserve Bank of Australia announcement. We're down at the 7750 area. There was huge amount of MACD divergence, triple divergence on MACD, and divergence on stochastics. And I said, you know what? They said that they're going to cut rates, and they have a red hot housing sector. And sometimes you do a little homework yourself, and you can figure out, okay, well, they have a red hot housing sector in Australia. Why would they want to cut rates and exacerbate? It's like throwing gasoline on a fire. Why, if cutting rates and you have a housing bubble? Probably not going to happen. So I made this little chart here and posted it out to my group. And sure enough, we broke, and our high we hit was 78.25. We pull up a chart. Pull up the trading view. And I'll pull up AUD USD. And we'll pull up maybe pull up an hour chart. And that was, so we were at that 78.75 area right in here. And then and when the news came out, we had a big breakout, big north side breakout, and that was our high that we came to. Was a 78.29 is where we were clicking, moving. See if I can move that over here like that. Yeah, so you can see that. Oh, I wanted to move that right there. Yeah. Yeah, so 78.29 news came out, and you can see like even a little range bat down here. We had that little bit of a range going into the announcement and the breakout. I'm going to drop this maybe down to a 5-minute chart to show you the that range. We'll probably have to go back a little bit. Okay. So we had that little range going into the Australia stock market open, and then we broke out, came back, and just like I showed you in that other, that the interest rate announcement coming out of the ECB, price broke out of the channel, price came back to touch back at the support area, and then big move up. Look at that spike. Look at that spike from 77.66 all the way up to like 78.39. That's 72 pip move or so in just a matter of 5, 10, 15 minutes. Bam. Okay. And and that was, if we go back to my chart, that's where I posted in Twitter. And so if you follow me on Twitter at Greg McLeod Trader, TRDR, I put out little tidbits like that, where we went right into the supply zone right there, and show you how to do those supply zones and things like that. So when you hook up with AuraFX, you get access to me and to Tom and to Rich, and you'll have this. You'll be armed to be able to, if you want to use news trading as part of your repertoire, you can. I'm usually I have avoided news. I want to tell you the truth. I have avoided news for a number of years. However, I haven't. I've nailed non-farm payroll the last couple of Fridays. In fact, I'm probably going to trade non-farm payroll this Friday. And that's probably somebody was like, "Don't press your luck, Greg." It's like, yeah, I'm 1 for 2 for 2, right? But if we look what's going on now, look at this big move here. That was the big blast off that I showed you. Here's our huge blast off from that consolidation going into the ECB keeping rates unchanged. The market settled down, and then the trend continued down. Now we're back in a range again. Why? Because tomorrow is non-farm payroll, NFP. And so this is our range going in. We got top of the range at 1.1033, bottom end of range at 1.1022. So it's a little bit of a narrow band range, and so we're looking at maybe a buy stop above the high, or a sell stop below the low. This range may persist. Now, if you were trading this market, you say, "Well, gee, I'm trading the euro. How come it's not moving?" Well, it's Asia for one thing, and another thing is that non-farm payroll is the next day, so we may continue to move sideways for hours until the big announcement that's going to happen here at 8:30. You may actually want to look to like 8 o'clock and check that out. Okay, so a long way to go, and you might see. Let's take a look at cable. Cable, a lot of liquidity on cable. If we have a good number, and you can see that we had the Bank of England announcement, and now we're coiling. We had up move, down move, and now we're settling in on a range there. The Dixie, which is the U.S. dollar basket, we broke above this 90. Oh, it's huge. It was a 95.43 area. This was an old high, and sometimes I look at the Dixie to get the U.S. dollar index to get an indication of, gauging strength. If we do get a solid number out of NFP above 240,000, maybe 257 or 260, we could see this go maybe up to 99. Nice breakout. However, if we get a number that is less than 240, let's look at the calendar. And I'm going to let you go. Let's see if there's any questions there. I see a good question from Timmy S. I'll be right there for you. And let me put that. This is the calendar. non-farm employment change 257, 240. You want to see what that number is going to be, and the price will tell you. Hey, if we get 260, 270, look for the dollar to go higher. Look for the euro to drop. Look for pound versus U.S. dollar to drop. However, if we see a very sad number, maybe like 200,000, 210, we'll look for the euro to rally, the pound to rally, the Aussie to rally versus the U.S. dollar. Because the U.S. dollar will be weak, and so that's the data you want to see. Timmy says, could you please tell us where we can get economic announcement news in a little earlier? Oh, this is Thomson Reuters. It's going to be way outside my price range or yours. Okay. But you can always, maybe you can negotiate a discount. Okay. So that's going to be it for me. Good luck to you. Let me know. I'd love to hear how your demo trades go. Email me at greatfxfluency.com and let me know. Hey, Greg, I used my ORFX demo account. I placed it on non-farm imperial, and I either made money or I got smoked. Let me know. I'm really excited to find out how you do. That's going to be it for me. I'm going to hand it over to Dan. I also want to encourage you to remain. We have more great stuff coming your way. Let me go ahead and stop this, go back to the slideshow, and go ahead. Ooh, okay, here we go. Slideshow, and keep going. Stay tuned for developing a trader's mindset. That's going to be awesome with Tom Long. And remember, $500 account raffle coming up at the end of day 1 and 2. Who will be the big winner today? It won't be me, that's for sure, but it may be you. So stick around.